Gold bullion has traditionally been regarded as a safe investment, but with deepening drops, is this slide the end of gold as a core investment staple? Peter Brandt joins me. Now, some analysts say we're looking at a 20-year bear market play when it comes to commodities as a whole. Peter, where do you think gold fits into this larger picture?
Long term, I prefer to hold gold as opposed to fiat currencies. Gold has lost value in relationship to the dollar, in relationship to most currencies. And so I think to some degree, if you have downward materials for a prolonged period of time, it will affect gold. But gold has a whole different personality that is going to be reflected in its value relative to a whole set of circumstances than the traditional raw material markets.
Now, the Commodities Future Trading Commission is reporting that speculators have been holding net short futures and options. So are investors short positions a classic case of emotional investor bias penetrating the markets, or, as you suggest, part of a strategic move in terms of capturing the marketplace when it really is low?
I don't think it's either one. The reality is that the speculator, for the most part, in the commodity futures market, as reported by the Commodity Futures Trading Commission, are primarily trend followers. As a matter of fact, of all of the money that sit in the hedge fund futures space, about 90% of it represents trading that's done based on trends. The trend in gold is down. The people who are short gold, the speculators who are short gold, are not short gold because of any economic factor. They're short gold because their computers tell them the trend is down. And it is really not any more complicated than that.
Okay, so if we're supposed to ignore the advice of economists, tell me, how should investors prepare for the storm ahead?
I take two different views of gold. I take a view of gold as a trader and using the futures market, and I take a view of gold as an insurance policy, a hedge against currencies, and I do that as an investor by buying bullion, not futures, sticking it in a safety deposit box. Right now, I am short gold futures. I see no reason not short gold futures, but that is as a trader, which is what my occupation is. But as an investor, I want to own bullion. I have presently about 2% of my net worth in gold bullion. I will build that up to 5 to 7% as gold prices go down. But I have a whole different time frame and a whole perspective and view on gold as a bullion play and gold as a futures play.
Do you think that economists are not understanding just how quickly and how responsive they need to be in terms of analyzing these changes?
I think economists are basically clueless. I have no desire to praise to economists. As a matter of fact, there have been some studies, and I'm referencing specifically a book by Nate Silver, the statistician, Signals and Noise. Some predictions work and some don't. The record of economists at making correct calls on significant moves in our economy is extremely poor. I think you rate a C minus at best, but probably in the D range. I place no value whatsoever on what economists predict.